Hi, this is James Shug at Westpac London with the end of day report for Wednesday, November the 7th. And there's been significant losses in equity markets right around the northern hemisphere today, whereas yesterday markets are up as the election was ongoing in the US. Today the result, which has basically left the same incumbent in place as president and the Democrats and Republicans with one house each in Congress, that result has got investors concerned that there won't be any change to legislation in time to prevent the fiscal cliff where spending and tax cuts that have already been legislated come into place in 2013 that risks pushing the US economy back into recession. The concern is that Republicans who clearly ran the wrong sort of campaign are not going to be in a mood to negotiate or compromise enough in time with the Democrats to deliver some sort of reprieve or some sort of alternative arrangements on fiscal policy that would mean less of a negative impact on the economy. I mean, the risk is that as the legislation currently stands, that as much as 3 percentage points could be shaved off US growth next year. And given that we're only looking for growth of maybe 2% or less, that risks a recession. So that's the big concern. Also in Europe, we had the European Commission publish their latest forecasts. They deepened their forecast recession for this year for Euroland from -0.3% to -0.4%, and they cut their growth forecast for next year from 1% to just 0.1%. In other words, virtually no growth at all, and that has refocused attention on the pretty gloomy outlook for Europe, as 80,000 Greeks are protesting violently outside the Greek Parliament, which is debating at the moment the €13.5 billion austerity package, yet another austerity package that they need to pass in order to receive the next tranche of bailout funds from the EU and IMF. Now, it's been made even more difficult by the fact that the workers in the Parliament itself have also gone on strike, and there's no result as yet, but that's an added concern for markets today. On the data front, we had German industrial production that fell 2% almost in September, down 1.2% over the year. We get GDP figures for Germany and indeed Euroland next week. We're currently forecasting flat growth in Germany, but the risks are now that the German economy contracts slightly, no longer providing any offset to the much steeper declines in the southern part of Europe. We had retail sales for Euroland. They were down 0.2% in September, and they're down 0.8% over the year. So soft data today, not much else to report on the data front. There's going to be consumer credit figures released later on tonight in the US, but really it's the focus on, as I say, European growth forecasts, US politics that's driven markets lower, with Greece thrown in as well. So some numbers. At about 6:30 London time, the Dow is down 2% and the broader S&P 500 is down 2.2%. The London market closed down 1.6%. There are 2% losses in both France and Germany, and losses of greater than 2% in the Spanish and Italian markets. The Aussie futures market's down just under 1% at the moment. In commodity markets, oil down 4.1%. That's at $85.09 a barrel. Copper's down almost 2%, and gold's been kind of unscathed. It's only off 0.25%. At $1,710 an ounce. The Aussie dollar, it was at 1.048 when I got into work this morning. It's at 1.04 at the moment, so it's down about a cent during the London session. We've got employment figures coming out in Australia. Today we're looking for a 10,000 fall in employment, and for the unemployment rate to nudge up from 5.4 to 5.5%. Also, Thursday, Europe time, of course, you've got the Bank of England and European Central Bank decisions. We're not looking for any change in policy from either of those, but the press conference involving related to the ECB decision could certainly deliver some interesting comments. So watch out for that. All right, that's it for today. I'll be back tomorrow.